You're listening to the Mental Money Podcast, the show that shows you how to master your mind to maximize your money. This show is for people who love to watch their bank accounts grow while shifting their relationship to money. Without further ado, let's get these insider insights from today's leading expert. Okay, so the conversation was so good, we had to have him back. Paul, you are with us, and we are... What just happened? Sorry. Paul, you are with us, and we are discussing some more about investing. Welcome back.
Thanks. Yeah, it was so much fun. We had to do it again.
Yeah, I know, right? So in the first conversation, we discussed a lot about investments, and I know that people who have like a no understanding, so at least a general understanding of investments, would get a good grip on like what's going on in that world. So now I want to explore a little bit more into the investing, like looking at options, looking at futures. I also want to gain some ideas about your thoughts on crypto, because I know it's so divisive. Either people are all for it or like all against it. I fall somewhere in the middle, but I realize that I'm a little bit of an outlier in that situation. So yeah, let's jump in.
Awesome. Yeah, it was a lot of fun. The first conversation, then we went a little bit, go deeper on this one, talk about different investment vehicles, things like that. And we've seen, like we talked about in the last episode, Robinhood changed a lot for people because it made things accessible that weren't accessible before. And then people are like, oh, stocks are cool, but what about options? Options look really cool. And options are amazing when they're done right. And when they're done wrong, they're horrible.
Right.
It's like anything. Because what happens is the hardest part with options is you can pick the right stock, you can pick the right strike price, but if you have the wrong expiration, then you can lose out. There's a third way. It's the time decay. So that the market makers, for people who don't know what that is, that's the person that's setting the bid and the ask the market of like, hey, it's at this, it's this. Well, they build time value into options. So people are like, well, I'm going to go far out on an option. When you go out far out on an option, it's going to cost you more money because you're buying time. So a lot of people that I know that are good traders, they trade incredibly short-term options because there's way less time. Like they'll trade a weekly or one that expires in a couple of days. And for people who are like, hey, what's an option? I don't know what that is. An option is when you buy a contract, you're buying the contract for the right to purchase 100 shares of, we'll use Amazon as a round stock, say $100, which is so crazy to say because it almost isn't $100.
Right. Exactly.
So you buy one contract, that means you have the right to buy 100 Amazon at say $1.50 today. So you're like, oh, I can buy that. And then if you exercise the option, you have to actually have the money and go buy the 100 shares. But what's cool about options is you can be, you know what, I don't want to spend that much money on Amazon, but I believe in it, but I'm kind of nervous with this market. I'm just going to pick up a couple contracts. And then when it goes up 20, 30%. You can be like, you know what, I'm just going to close out the contract and take my profit. And you can take that without ever having to take the stock. So it gives you a lot of flexibility and the ability to control large portions of a stock you normally couldn't buy.
Right. And then I know every contract is 100 shares of each, either call or put, whatever you decide to put into. So I just said a lot of different things. People probably
there's so many.
So what's a call and what's a put?
Yep. So call is when the easy way to think about it is when you're bullish and you think the market's going up, you buy calls because it's Apple's going to, I think, say in your head, you're like, I think Amazon's going to go from 100 to 110. So you want to buy a call because then when it goes up, you make money. And the last few months, you could have made a lot of money if you're buying puts because the market's been going down. And puts basically you're basically betting the market's going to go down. So that's an easy way to think about it. Calls green, puts red.
Okay. And then I know, and within the call and puts like kind of arena, there's something called shorting a stock. What does that entail exactly?
Yeah, shorting a stock is incredibly risky, and I highly don't recommend that one unless you're very seasoned and you've talked to an advisor. Shorting is when you're actually you're going short the stock, so your loss could be infinite. So it's like it could always go. As long as the stock keeps going up, you're losing money. So that's why you saw last year, was it last year or the year before, the meme stocks, when everybody was shorting, GameStop and all this, and everybody started buying it. They started what's called a short squeeze, where people had to keep covering their positions they have to buy. So when they buy, it kept driving the price up and it kept going up. But yeah, selling short is very dangerous.
Yeah, I would not even to do it. I just know that that's a thing that exists.
Oh yeah. And it's fun. Yeah. And a lot of the big money hedge funds and stuff like that, those short stuff all the time. That's when they got squeezed with GameStop and everything, which was kind of fun because it was cool to see people actually get to make money off of those guys.
Right.
Because they were losing a lot.
Oh yeah. I wasn't involved in the blood sport, but I saw the
Yeah.
work going on behind scenes. Okay, so I know another element to an options is also, what is it called? Stop loss. So after losing a lot of money,
Yep.
um, uh, trading options, I was like, okay, let's make sure that this never happens again, right? So I put stop losses in place so that I can just kind of mitigate some of that risk and not have an infinite loss if I
Yep.
were to like if I were to put a put call not a put call but a put in place.
Yeah. So what happens, and this is what I tell people, if they want to trade options and you feel like you're comfortable with it and you're doing it, you have to realize that when you buy that option, it can crash fast. Like
Yeah.
it can, you've had experience of that. When it goes bad
Yeah.
so fast. So
Yeah.
what people do, seasoned people that'll do it is, so say they buy that contract we talked about earlier on Amazon and it goes up like 10%. You're like, oh, I made some money. Immediately they'll put a stop loss behind it. So if it goes under what they bought it at, or maybe a little bit higher, then it just sells out the position completely, because those things can move so fast. And
Yeah.
I've seen it all. And it's happened to me a bunch of times where you have a good option and you're like, oh man, I'm making some money, I got this. And you turn around and come back 20 minutes later and you're like, where'd my money go? It's
Yeah.
like,
Right.
they'll move all over the place during the day. So it's always good to use stop losses.
Right, for sure. So I think that's probably the number one thing that I use to mitigate my losses. And I know it also puts a cap on your gains technically too, but I'm okay with that, right? At least like at a 10 to 15% margin, somewhere in that area.
Yeah.
What
And once you
other
get
things? Sorry, no, go ahead.
so once you get a profit, you always want to lock it in, unless you're, that was so different than stocks, because stocks, you might be like, oh, I'm just going to keep this for 5 years. Options, you're not going to keep for 5 years.
Right, right. So what are other things like stop losses that people can put in place to kind of mitigate their risk?
Man, stop loss is the best one. I mean, because you can do it, and it gets a little bit confusing because there's a stop loss and then there's a stop limit, where the limit, like a stop loss, once it's triggered, it sells. A stop limit, it has to be triggered and then hit that price again. So if it fell through, it might not trigger. So I tell people stop losses are really good. And a lot of the companies now, which is really cool, is they have what's called trailing stop losses. So you can put in there like, I want my stop loss at like whatever I bought it at. And then as it goes up, it'll move in conjunction with it and it'll kind of trail it. But what'll happen sometimes is dangerous is the market will kind of come down and tick those things sometimes, and it'll close out the position. So they can be a little trickier if they get too close. But yeah, so stop loss is the one that's the easiest.
Got you. So when I was first learning about options, what kind of threw me off and threw me for a whole loop, right, was the idea that you're pretty much predicting or taking a really good educated guess about what the price of the stock is either going to go up to or drop down to in order to determine whether you're going to play in a call or a put, right? Is there a more, I know there's like I forgot what they're called, the alpha and what are those things called? I forget. They're like the Greek symbols that give you like those numbers that will kind of help you do the math to kind of give you a historical overview.
Oh, like Fibonacci numbers?
I don't know if that's what they're called.
There's so many of them. Yeah. And that opens up a whole nother conversation, which is a lot of fun, because in the markets, you get your fundamental analysis. People are like, hey, these are the fundamentals of the company. And then you get some people that just live and breathe technical analysis.
Right.
And technical analysis, I like that way better for me because I'm a visual person. I like to see charts, and it's like, okay, this is this way, this is this way. And what's cool is, like we talked about earlier, you can go through like Fidelity or Schwab or TD Ameritrade, and Ameritrade has Thinkorswim, which is a really cool software that they basically give you for free with the accounts. And it has all the different chart things you can do in there. Because with options, you definitely want to be, because like you said, you're literally guessing at the price in a certain time frame. So you want to be on the side of momentum. So a lot of times you want to be looking for something that's either way oversold or way overbought. And you're like, man, this thing is so oversold. And then you start seeing on a chart, it starts to make a recovery, and the green volume picks up, which means buyers are coming in, versus red volume, which means it's sellers. So a lot of times you can look at the volume and say, okay, we're getting somewhere now. And then you could take a gamble, but literally, it's literally guessing at that point.
Yeah. I was trying to look through my Robinhood app to see, which I don't know, Robinhood's kind of like sketchy sometimes. I was trying to see what the name of those Greek letters are. But yeah, there are like people, people use some form of analysis to determine whether or not it makes the most sense to put in a call or put for whatever business. But so you're saying just track it, kind of like look at the historical data.
Yeah, historical data and charts. Charts are really a really powerful thing when you learn how to use them, because you can see kind of where things are moving, which direction they're headed in. Because really, when you look at it, momentum is the biggest driver of the market. It's like, is it bulls behind everything or bears? Like the last, 3 months has been nothing, or shoot, I guess almost 6 now. It's been nothing but an onslaught of just selling. And then we get short rallies. But when you look at it, they're still way more downward pressure. What's one thing that's really cool you can look at, and it's called a golden cross, or no, sorry, a death cross, not a golden cross, like a death cross. So a moving average is like the price of the stock has moved over a certain amount of time frame, and they have the two most common ones are the 50 and the 200 day. And you could put that into any chart and look at it. But when you put it, you'll see it, the 50 cross below the 200, which basically means the selling pressure is just massive. So even when you get a rally, it's still going to be rough. That's why a bear market can last, a year and a half or whatever, sometimes 9 months. But the bull market, once it shifts momentum, then you're off to the races and running. But it's like, as long as you have that downside pressure, it's really tough.
Right. Got you. And so, okay, I know we said a lot of things. So what's the difference between
it's a lot.
technical analysis and like the other analysis that
fundamental?
Yeah.
Fundamentals is all numbers like, Amazon projected this much earnings per share. They did this much in revenue. They're predicting this. Analysts say price is going to be 115 by the end of the year, or the S&P 500 is going to be at 4,000, hopefully, or whatever. And then technical is all charts. So I love technical. It's visual and you can see it. And it's like, okay, you can see where the money, how the stock's going, where it's moving, where volume is. And for people who don't know what that means, volume is like how much of the stock's being bought or sold today. And you can see the pressure. And a lot of times it'll have like green if it's, more buyers than sellers, red if it's more sellers. So you can see momentum is the biggest driver of the market. And especially now when people are scared, like the sell-off days are so violent, because there's so much downward pressure right now. So unfortunately, we're in that kind of a market where it's like, but if you're playing the long-term game with stocks, it's a great time to be dollar cost averaging, like we talked about before, is just buying the stuff you believe in and just keep buying it. Where options is like, you have to be right. You have to be on the right side of the momentum, because if you're on the wrong side, because you said you've had it before too. Like you get in one, you think it's good, and if it moves against you, it's violent. Like it's like, so never. I don't play with more money. I call it playing. I don't play with more money in options that I'm, willing to lose. Yeah. For sure. So stocks is like the big thing for me, is like long-term investing, but options are fun. I mean, they're just, if you get them right, you feel like you're a genius, and then you get them wrong and you feel like you're not a genius.
Right. Do you have any books or like recommendations on, like, I know Robinhood and some of these new, brokerage accounts have, like, they give a lot of information.
They give a lot.
So that, because they don't want you to lose. They really do want you to make money, because they make money too when you
100%.
Right. So are there any books, or are there any resources that you would advise someone to look at, just to kind of get a good understanding of what they're about to get into, even not necessarily like to make life-changing amounts of money, but just to really understand what they're getting into?
Yeah, I actually need to think about that. I can't think of a really good book off the top of my head. But even just Googling like technical analysis is a really good thing. Just start stock market technical analysis, because then at least you can start to, okay, this is what a chart looks like. And then you can go to, I believe it's stockcharts.com. They have like a bunch of different charts in there, and you can kind of see stuff. And then you start to look at it. And like I said, when we talked last time, was watching CNBC and starting to educate yourself. There's one on Fridays, I think it's called, my wife actually knows better than I do, but it's like options something, I forget. It's after the market closes on Fridays, because I always watch that one. And just trying to expose yourself to people that are doing well with options and different strategies.
Okay. And are you trading options?
Oh yeah.
Okay. And so if you don't mind, could you walk me through your process?
Yep. Yeah. So what I do, I'm a big technical person. So I look at charts and I'm like, okay. And then I'm in a group with some other guys that are way smarter than me. And it's like, they'll talk about different things like, the market's looking like this, looking like that. And then they'll look for momentum things, or I'll look, I'm looking at charts. I'll be like, okay, this thing is, it's way overbought or way oversold. And then it's like, if it starts to get some momentum, so say it's oversold. And so that means it's like on the chart, it's like, it's kind of flattened out, but then it's starting to make progress. And it's like, okay, hopefully we're going to get some upside here. This could be a good potential one. And then the other is the exact opposite. Like when the market's overbought, then you're like, okay, looking kind of ugly. All right. So if something bad's about to happen, you kind of wait. When you get that downward momentum, then you get in. But like we said earlier, once you get in, then you're setting your stop losses, because you want to ride that momentum. So what's really common, especially for people, is the SPY calls and puts, because that just tracks S&P 500, and you can catch trends with that one. That's the one I do the most on. And I just dabble around. Like I don't do anything crazy, but I like to do it, because what I'll do is I'll do that, and then I'll take proceeds from that and just buy more SPY for the long term.
Got you. No, that makes sense. No, that's a good strategy.
Yeah, I keep it small because it's fun with options. You don't have to put a lot of money in there to make a decent return,
Right.
but
No,
you got to
but
manage your downside.
oh, for sure. I don't think that can be emphasized
Yeah,
enough.
over because I'll make the mistake. We're all guilty of. You like you hit your stop loss in your head. You never set one. Like, oh, I know I should sell, but I think it's going to come back. And you're like, is it? And it never does. I mean, it does 1 out of 10 times, but when it's gone, it's gone. You got to
Yeah.
cut loose.
No, for sure. So I think I've heard you kind of allude to the fact that there's a difference between technically an investor and a trader,
Oh,
right?
100%.
Okay, what would you say the differences are?
The investor, you're just putting money away and you're just like, man, I believe in the S&P 500. I believe in, I'm using an Apple computer and I just got a package from Amazon. So I'm buying those. So I'm buying things that I believe in for the long term. And then long-term horizon investing, when my trading brain turns on, it's like, okay, are we going up or down today? Okay, look, check CNBC. It's like, ooh, downward pressure. And then you look at the markets, you look at the charts, and you're like, okay, is this overbought or oversold? It's like, oh, cool. If we catch a momentum swing, we might be able to grab a couple points, which a couple points can be a decent amount of money. And then, of course, you set in your stop losses and, go from there. But trading is like super short term, and you got to be paying attention too, because people are like, oh, I'll just put in a trade and leave. And it's like, you can't. It's like until you have it where it's already taken off, and then you put in the stop loss, then you're okay.
Yeah, for sure.
But yeah, they're two different animals for sure.
Okay, got you. Yeah, I realized once I really kind of got a hang of options, I'm not the greatest options trader in the world. I'm not going to profess to be that.
Yeah.
But I have a general understanding. And once I kind of got a handle on what I was doing, I realized that I can't do this every day.
No, it's mentally draining.
And it's an emotional roller coaster. Like I see why some people really lose their minds like trading, because I was triggered. So how do you deal with that? No, it's terrible. Yeah. How do you deal with the up and like how would you advise someone deal with the up and down of like what comes with trading?
Yeah. So I'd say first thing is start investing first. Get yourself a good, like we talked about previously, is get a really, really strong foundation, because everybody wants to dunk a basketball or hit a half court three, but it's like, you got to chest pass and then you got to run, set a screen and do all these things. So get your basics down so you're making money all the time in the market you're investing. And then when you do educate yourself, like I said, put a lot of time into studying, trying to figure out, what kind of a trader you'd like to be if you want to try and dabble at it, and just dabble a little bit, but you have to basically cut the emotion. Like that's one reason why I like doing the S&P 500, because I'm emotionally attached to certain stocks. Like I'm ridiculously attached to Amazon, because I like joking around, if I said on the last episode, but the planes fly over my house like 5 times a day. I'm like, they're making so much money and they're dropping off packages for my wife every day or me. I'm like, okay. So I'm like, well, when I would buy things with Amazon, I would buy calls or when I would buy calls or puts on Amazon, I'm too attached to it. So I'd be like, oh no, it's going to come back. And it's like, didn't, lost it. So find things that you're not attached to. So for me, what really keeps me sane is if I do decide to trade, because I don't trade every day, I just kind of look for things where like, oh man, it's like, if the momentum looks like really good on the upside or really bad on the downside, it's like, okay, cool, let's try to catch a momentum trade. So what I'll stick to is indexes, because I'm like, I'm not attached to the S&P 500. It's like, I don't even know what the top 10 holdings are. It's like, I know Amazon's in there, but if you separate yourself from it, then you're like, okay, I can do this. Okay. So it makes it that way. Yeah. Cause like you get emotionally invested in the stock and you're just like, oh man, it's like, and now if it's an index, just keep doing that. And like I said, make it sure it's, something where you're dabbling a little bit, where it's not money. It's going to hurt you if you lose it. It sucks and it's not as much fun, but that's why I tell people you got to be an investor before a trader, because even the days you could have a day where you're like, oh, I'm feeling good, I want to trade a little bit. So you're trading and maybe you don't, maybe you do like 2 trades and you lose money and you're like, all right, I'm out for the day, whatever. You still have your other stocks and you're like, oh, cool, I made money in the whatever, I made money off Amazon today, or I made money off of Exxon or whatever. It's like everybody's, freaking out about gas prices. It sucks right now. So it's like watching like Exxon stock, is another option for people. I know a lot of people are doing that. They're buying it and selling Exxon because it's like, okay, those guys are making stupid money right now. So it's like, but that's not a recommendation to buy Exxon, of course, but it's like buying the things you use. So, it's like, that simplifies it down, but going back to that part is just be an investor before a trader, because trading is very emotional if you let it get that way.
Yeah, for sure. Yeah, I could tell you some stories. I cried.
Oh, and it was bad too, because in 2000, well, basically from April 2020 to like almost the middle of last year, everybody could, I regret not going harder on trading, because it was like, you were just printing money. It was like, you just like guess, I think today I'm going to bet, or literally AMC or GameStop or Apple, whatever. I mean, everything was going up for a year and a half. And like everybody was a good trader then.
Yeah.
Now you're seeing it where it's like the guys who are good now are the ones that understand the put side of the game, because that's where, if you don't understand that and you're just always hoping for the market to go up, it's not always going to go up. But so the guys that are really good are the ones that are really good at trading puts too.
Yeah, for sure. Okay. Okay. So that was a good overview for the most part of options. I feel like if someone listening, they know where to look for more information.
Yeah.
Right.
Yeah. Well, you just want to, and it's like, you just want to expose your mind to it. Your subconscious, like, oh, okay, there is these thing out here that you can learn, just and the people that do it. And then you could find different programs and things like that later on, but you can get so much good knowledge, like, going to CNBC, going to Google, YouTube, and like you can learn a ton. There's so much good stuff on there because the fundamentals are the fundamentals. And once you get that, then everybody's got like, well, I have this Fibonacci strategy, or I use, stochastic, there's all kinds of weird terms. Like, what is that? And then you got to Google it and you like read it. You're like, oh, okay. Moving averages is this. Okay. And then you start to make sense. And then you're like, all right, I'm stepping my game up.
Yeah, for sure. No, for sure. So that was options. What about futures? I know that's like a different trading mechanism.
Yeah, futures is a wild one. And in full transparency, I don't trade futures yet. I should, because futures is so wild because it moves so crazy. And it's that weird time too, because people are trading it before the market opens or after it closes or when it's open. And it opens up a window to being able to trade, during weird hours or on the weekends or holidays.
Right.
But yeah, futures is definitely a later on piece. Like I would even say that's after learning how to do options. Then you can start dabbling futures. Cause like I said, I have friends that do it and they can do really well with it, but you got to have really good risk management because once again, if it turns against you, it's like, bye money.
Right.
Yeah. But there's guys and girls that make money doing it though. I mean, it's wild.
So what exactly is it?
It's like options, but instead of an option contract, it's basically a futures contract. So you're buying. So like they'll have the for the S&P, it's ES that tracks the S&P 500. They have like the original futures contracts were massive. You had to have a ton of money to do a lot of them. So now they have what's called mini contracts. So they're minis. And so you can go into futures, and that's what got me interested. Like, oh, I need to start learning how to do this because I didn't want to do it before because I was like, that's a dicey thing. But you can do futures minis. And then you have less money at risk, but then you still have to have your risk management. You got to be looking at that like, okay, how much am I willing to put into this? And then which way do I think it's going? Because those are just going to be on the indexes. So if, and the weird thing about those when people get confused is people see like pre-market trading, like, oh, the futures are all like, if you watch CNBC in the mornings, you'll see like futures before the market opens. Oh, they're up. You're like, oh, it's going to be a great day today. It's going to be a great day. And then the market opens and the market tanks. And you're like, what happened? What happened? Because they're different things. So it's like people that are buying the futures contracts aren't technically buying like, the stocks that day. So it could be, it gives you an indication of where the market's at, but they're so different.
Got you. Okay. That's interesting.
Yeah. It's wild, but minis have changed the game. That's for sure.
And minis are available on most brokerage accounts, or is this like a special thing?
Yeah, you got a lot. I think Ameritrade through Thinkorswim. I think I'm not 100% sure on that one. But that time you have to go through a different brokerage. Like a lot of them, you can't trade futures on.
Right. Yeah, because I haven't seen it like available on like Robinhood.
Yeah, no. Okay. You have to find different ones. Like a lot of them are different level brokers, and then they'll want you to fill a bunch of stuff out and make sure that your risk tolerance is right because. They don't want to. I think people like Robinhood and Fidelity and Schwab. I don't think they don't want to take the risk of people losing a bunch of money on futures contracts.
True. Yeah, for sure. Okay.
Yeah. So you got to do some more research on those too, because there's different brokerage firms on that one, but I'm not 100% sure like what the good ones are for that. Cause I haven't even gone down that road yet, but I have a few friends that do it and they love it, but they're trying to talk me into it.
Of course. No, naturally. Okay. So that's that. What about, crypto, the most divisive of trading options in the world.
It's crazy because, like you said, it's like we were talking before the episode before we started recording that crypto is the one where it's like people are either insane fans of it or insane haters, and it's like pretty rare to find somebody in the middle. And you and I were kind of joking around. We're both kind of in the middle. I'm like, do I know 100% about crypto? No. It's like I don't get, but do I want to be invested in it? Yeah. It's like I want to make it's like I joke around. I was buying Ethereum at $300, back in the day, and then I bought a bunch, and then it rallied to like whatever it did the first time, like 1,000 or 1,200, and then it crashed to like 75. And I was like, oh my God, I'm never buying anything. I just like let it sit for like a couple years. And then it started going up, going up, going up. And I'm like, oh wait, I still have some of that ETH stuff. What is that? And I went and looked at my account, and I was like, oh my God, I'm up 1,000%. I'm like, this is insane. Went from 300 to 4,000. I'm like, this is the greatest thing ever. So then of course I started buying more, and then now it's just tanked again.
Yep.
So it's and it's crazy, but it's like, I always go back to, when Gary Vee and guys talk about different things like Web 1.0, 2.0, and now we're in Web 3.0. Even with Web 1.0, back in the day when 2001, there was all these .com companies that made no damn sense. Like, what is this? DinosaurRocks.com, and they'd raise $1 billion and go public. And then what happened was the market tanked, the losers lost, and they're out. And I think we're seeing that in crypto now because, last year, there was the most insane things out there. Like, it was just crazy. Like, oh, this new Shiba Doge coin, whatever. I mean, there's all kinds of stuff. You're like, this makes no sense. How does this make any money? And now we're finding out like, hey, a lot of these don't make any money, and they're going to the wayside. But your main ones that are strong are going to be like, they're going to have the same thing happen to them that Amazon and things like that from the early 2000s. You could have bought Apple for nothing back then, Amazon for nothing. So now you're looking at like, is Ethereum going to go away? Is Bitcoin going to go away? Are these big players that actually have utility, are they going to go away? I mean, I don't think so. If they do, it's going to be really weird because they actually have a purpose. But yeah, like Shiba and Doge, I mean, what do they do? I don't even know.
No, they don't do anything.
Yeah. So I think we're going to see a lot of like, the meme coins vanish, which I'm totally fine with. And then legit crypto, if it follows the historical trends, it always does. It goes up and then it crashes and then it exceeds the next one. Then it crashes and exceeds the next one. So, the crypto bulls and cult guys that I see on Facebook and Instagram, they're crazy. They're like, oh no, now we're gonna hit the bottom. Now we're going to $1 million a coin. And I'm like, that'd be really cool.
Yeah.
But at the same time, I'm like, I'm not on either side of like, oh my God, this is the greatest thing, or oh my God, this thing's bad. I'm like, this could be a good investment. So I'm just going to keep dollar cost averaging. And I literally buy a little bit of ETH and a little bit of Bitcoin every week and just have it automatically bought. And I'm like, if it goes up, I don't get as much. If it goes down, I get a little bit more. And then hopefully in 5 or 10 years, when it figures its way out, I'll get a whole bunch of money.
I know you're enjoying the episode, but I wanted to quickly let you know about the book Converted. Uncover the hidden strategies you need to achieve massive credit score success. As you are on your financial journey, this book is designed to be the guide towards ensuring that your journey is as smooth as possible. Doesn't matter if you're clearing up your mindset or on the verge of having more money, credit is going to follow you forever. I bet you that you'll see. As you begin and continue to apply the resources mentioned in any given episode, credit will continue to come up, and we want you to get right. Go ahead and head to www.convertedcredit.com. That's www.convertedcredit.com. That's www.convertedcredit.com and get your copy today. Right. No, that makes sense. Yeah, I think that's kind of where I'm at too. I'm just kind of waiting to see where it's going, but this is definitely the future. Like you had entire countries investing in Bitcoin, ATMs popping up. Like if you're looking at the trends alone, like I'm just spewing off trends, right?
Oh yeah.
And like if you're just looking at the trends alone, not even really considering utility and like how it's actually changing money, like it's literally changing money.
Yeah, it's crazy.
Then yeah, I mean, we're here. The future's here.
Well, think about you hate to use it as like war as an example, but the Ukraine, when that all went down and everything collapsed, people could get money, they were sending them Bitcoin.
Right.
And they were using it to get to stay alive. And it's like, okay, that was a real proof of concept if I've ever seen one. It's like they were literally doing fundraisers like, hey, send Bitcoin to this address, and it was going to the Ukraine, and then people were able to actually use it, which is, to me, is mind blowing. It's like, that's insane.
Yeah, China tried to censor it and they were not very successful either. There's so many workarounds to be able to just access it. So yeah, no, the future is definitely here. So as far as like, speaking of the future, as far as things that you predict are coming down the pipeline, do you have any predictions for what like things around money could be happening, investing? I know it's all a wild guess. So it's
all a wild guess. I think we're living in a crazy cool time, besides, it's like you can look at the world, as horrible and, inflation and all this stuff, or look at it as like, okay, things are changing, the world's changing. But yeah, we're going to see a lot of things. It's like, even things like Apple Pay. I mean, Apple Pay changed the world. I mean, it was like, it's crazy. Like I still joke around. I'm like, so I just you put my phone and you take money? I'm like, this is cool. And then I got one, I joke around, I've got one of those Apple cards, the Apple credit card.
Oh
It has
yeah,
no
love it.
numbers.
Yeah,
It's
love it.
great. It's like you give it to somebody at the store and they're like, what is this? Like, oh, it's,
Mhm.
it's a metal thing, but it's like, I've never even seen, like, I don't get a bill in the mail or anything. And my phone just says, hey, you owe this much money. What day do you want it to go out? And I just tap a button and my Apple money moves around. And I'm like,
Right.
and when they get the Bitcoin and everything to be able to do it, then it's, to do more things like that. That was one that the rumor was at the end of this year. I don't know if it'll happen, but can you imagine when they put Bitcoin on Apple Pay? I
Yeah.
mean, it's going to happen.
Yeah.
And I mean, that's crazy when you think about it. It's like, because Apple Pay is it's just mind blowing. It's like, we were on vacation, of all things, we went to the beach, took my daughter because she loves the beach. And I was like, I was like, oh, you know what? We're going to have family time. I'm leaving my phone in the room. I'm not bringing anything. And then we got down to the beach and they're like, oh, it's $15 because you got like a free chair and umbrella. Like, oh, it's $15 for the umbrella. And I'm like, oh, I didn't bring any cash or anything. He's, oh, no problem, man. Just here's my Apple Pay thing. Just bump it with your phone. And I'm like, I left my phone in my room, but that's really cool. I was like, man, you're a smart entrepreneur. Cause he goes, yeah. And I started talking to him. He's like, yeah, people come down here all the time and they leave their wallet in the safe in the hotel room, or they leave their cash in the hotel room. But they always have their phones. They want to take pictures. I'm like, yeah, I just wanted to like be 100% present. We took pictures yesterday. I just wanted to hang out with the family and just, digital detox or whatever. And he's like, well, yeah, I started doing the Apple Pay thing. Cause then, I get a lot more sales because people don't have things. And I'm like, man, just give me your phone. Just take your phone and just poof. And he goes, yeah, we get a bunch more sales from that. And I'm like, yeah, that's genius. Yeah, he's hustling. But it's like, it's going to be the future though. Like, it might be a day when we don't even have credit cards. It might just all be, on your phone. It's all different versions. Maybe, you maybe have an Apple Pay and then you have a Amex Pay and a Visa Pay or whatever. It's going to be wild.
Right. No, for sure. So, I have a question for you.
Mhm.
Whenever there's like a really big bear market, for some reason we have a lot of issues with brokerages, like especially the apps, like really withholding funds and not letting us trade or withdraw or anything like that. What is your take on that?
It's weird. A lot of times, the bigger apps you don't have any problem with, like Fidelity, Schwab, Ameritrade. Like I've never had any problems with that. Robinhood had got, that one where they had an issue where people couldn't trade certain things, do things like that. So yeah, that part can be kind of like, why is this going on? So it's
Right.
like, but knock on wood, I've never seen it with the big companies. So
Mhm.
hopefully it's not an issue, but yeah, especially in this time, when everything's just blood red and people are trying to sell everything, it's like, calm down, people, just calm down.
So when we're thinking about diversification, should we also consider where we put our money as much as like where we're investing?
Yeah, I think so.
Okay.
Yeah, for sure. And I like, because like I said, I still use Robinhood for, like, I have a play account that I use money in there because it's a great app. It's easy to use. It's fast. It's like, and so I'll mess around on that one and I'm showing people stuff. I'll be like, hey, use this. It's super easy. And then when you get more advanced and you want to do something, then go to a Schwab or a Fidelity or, because as the cool thing is, as your accounts get bigger, then they start offering you more services, start giving you free things like at Fidelity and Schwab. You can have, like, I have a fun account that it's linked to a debit card and I've used it all over the world. And you're like, oh, this fee is going to be $19. I'm like, they rebate every credit or every ATM fee. So it's like, you get different perks by being with some of the bigger brokerages, and they don't cost, like, the accounts are free to set up. So it's just a little, it's people are like, oh, I can't go to that company. I don't have enough money. It's like, you've got plenty of money. Just start.
Yeah, it's interesting because like when I first started my marginal account, I think you needed up to $2,000 to begin trading for the margin.
Yeah.
But you could have just put, like, I just put money in there like whenever I could. It wasn't like I had to have the $2,000 up front. So yeah, that's very true. Okay.
Oh yeah, just start.
No, for sure. So for someone who's like a novice, really interested, like they're really on a good financial trajectory. They have their debt down, which is one thing I always tell people
Oh
to
yeah.
do before they start investing. So they have their debt down to manage something manageable, not even really the minimum, but just manageable. What do you think like the natural next step is?
Next step is, if they have a 401k at work, please get your 401k set up and get the match.
Right.
People are like, because it's free money. So if you're listening to this, you're like, oh, I'm scared to invest. Just if you go to HR and be like, hey, what's our 401k? Do we have a match? A lot of companies be like, oh yeah, it's 3%, 5%. That's free money. So as long as you put 3 to 5% in, they're going to match it dollar for dollar. So you're getting free money to invest, which is going to make your results come up even faster. And then if you maybe you're self-employed and you don't have a 401k, then it's IRA for sure, because you want to start planning for retirement. So you go in and talk to a Fidelity or a Schwab and be like, hey, I make this much money. Do I qualify for a traditional Roth? And they're like, oh, okay, based on that, you qualify for a Roth or you qualify for traditional, and set that one up, and then just get the IRA set up, because that's the biggest thing is the sooner you start, the better off you're going to be, because you have the power of time and compound interest. So the younger you start, the less you have to save to have a lot of money. If you wait till you're older, then you got to start putting so much money away. You can still do it. It's a lot more money you got to put away to get the returns.
Right. So how exactly does compound interest work for people who don't understand the concept?
Yeah. So compound interest, and I don't know if I said, I always like quote Einstein, he called it the eighth wonder of the world. So compound interest, and you play around the calculators and look at it. You can go on any of those investment calculators and you put it in there. So when the power of compounding is when so say you put $1,000 into the stock and it goes up 10%, and then it keeps going, whatever. So now not only is your $1,000 went up 10%, now that's another $100. So now you've got 1,100. And then the next month that goes up 10, or next year that goes up 10%. Now your return, your $100, the $100 that wasn't even yours, that is yours now, that earns money too. And so you get money on top of that, and then money on top of that, and then money on top of that. So when you look at the chart, it's really boring, is it kind of goes like this, and then after about 20 years, it starts curling. And then like at 30 years, it just starts going. And at 40 years, it just starts taking off. So that's why investing is kind of be frustrating in the beginning. People are like, oh, I've been putting money away and I only got like 10 or 20 grand. And I've been doing this for 5 or 10 years. I'm like, yeah, cool. It's like, you got another 30 to go. So it's like, cause you'll see at the end, that's when you make all your money, is at the end. You know, so that's like old people, and they get frustrated because they want to go do stuff, but they're too old to do it. Now they finally have money. You hear that story all the time because they waited. And when the money compounds, you know, when you look at the investment calculators, when it goes, it's fun. It's addictive, because you're like, okay, if I put $500 a month, if you put $500 a month away for 40 years at 10% return, you know, it's going to be well over $1 million. I mean, that's a cool number to know. It's like, you will be, I tell people, it's like anybody on earth, anybody listening to this can become a millionaire. It's just time, action, and money. So make the commitment to, how do I come up with $500 a month to invest? Okay. I found a way to do that. And now I'm going to do it every month for the next 40 years into something conservative, like a timeline fund or an age retirement fund or whatever, and just let it go. You're going to be a millionaire.
Yeah, for sure. Okay.
But everybody's like, man, 40 years is too long.
Yeah, but they're going to, if you live 40 years, the time's going to go by regardless. And then the point is like, what do you have to show for it at the end of that 40 years?
Oh, I know. It's funny because I get impatient. Like, I was talking with my wife. I'm like, we were talking on one of our money dates the other day, and I'm like, I just get so frustrated because I'm not where I want to be yet. And she's like, well, yeah, but you tell people it takes 40 years, right? And I'm like, yeah. So how long have you been investing? I'm like, 20. I'm like, okay, I'm only halfway down the timeline. So I'm like, okay, it's just frustrating because you want to be so much farther ahead. Like, we're never, and I think this is the problem we have a lot too, is we always think, man, when I get to this next level, we're never going to be that level. You're always going to be wanting the next step, the next thing. When you get $1 million, guess what you're going to want? You're going to want 2.
Yeah.
And when you get 2, you're going to want
2. I want 3.
Yeah, exactly. So, I mean, it's like when you get 2, it's, I want the next one and the next one. So it's like, it's like, you got to enjoy the journey too, and have some fun. Cause like, I was laughing because like we said, I'm only halfway through my investing journey. I'm like, oh, kind of depressing, but fun.
Yeah, for sure. So did you just say you went on a money date with your wife?
Yes.
What is that? Put us on.
It is one of the best things ever. So, and I don't know if it's one of the reasons we've been married for 22 years, it'll be 23 this year. So I think all my friends, I'm like the only one that's still married. If they're listening, sorry. But I got real good advice years back from one of my friends. He's like, man, you got to always, just when it comes to money, he's like, put it all on the table. Just, to talk to always talk with your wife about money. So like, I have friends when they're like, man, I don't tell my wife anything about that. And I'm like, well, that's not good, because you're kind of doing some dumb things. Like, my wife will keep me in check. Like, I was like, so a money date basically is we go out and, we used to do it like, I like do it like once a month. Now it's like whenever we go out, we always talk about money now, because she loves investing. She likes knowing what we're kind of working on. So we'll be talking about like, hey, the market's at this, thinking about doing this. Your IRA is almost maxed out. Mine is too. Do you want to buy anything here? Then we were talking when the pandemic happened, I was like, we need another business. And I'm like, we got to do something, because my brick and mortar business is MMA gym, and then MMA gym consulting. So it's like, those are non-essential businesses. So I was like, you know what? We need to open like a franchise, like a sandwich type place. And she's like, okay. And then what happens when somebody calls in sick and we got to go in and make sandwiches? And I was like, okay, you're right. Yeah. It's like, so we communicate really well about money. It's like, because I'll tell her like, oh, I'm thinking about doing this. And she'll be like, that's a horrible idea. And I'm like, yeah, now that I said it out loud, it really is a bad idea. So she keeps me in check. And I feel good too, because it takes a lot of stress off because we never fight about money because we both know about it. It's like we both know where we're at in our situation. And I'll be transparent too, because sometimes I'll feel super broke because, an investment deal come along, or I'll buy into like a real estate deal. And I'm cash broke right now, but it's like, I'm investing well, but I don't have a lot of cash, and I feel bad. And I'll tell her, I'm like, always got to back down just for a couple months, so I can rebuild this buffer back up. And she's like, oh, okay, cool. No problem. So it's not like anything permanent, but if you listen to this, I highly recommend money dates with your significant other.
Yeah. But it sounds like one of the more important pieces is the fact that you're willing to be accountable.
Oh yeah. 100%.
Yeah. Cause I don't know. I don't know if there's a lot of people who can really like take that feedback. And that
it's tough.
They get,
I have friends I tell them, I've it's kind of funny. I had one friend tell me I was an idiot for having, he's like, you're an idiot. I would never tell my wife these things. And I'm like, okay. And then a couple years later, he got divorced. So I was like, oh,
somebody, cause something right.
Yeah. Cause money can really mess up a good relationship. I've seen it. People are like, oh, the guys get embarrassed, like, oh, I made a bad mistake. And it's like, well, maybe if you would have talked about it before you did it, you wouldn't have put the money in the thing, and then you would have it still, or you'd loan money to your crazy cousin that never pays you back, and then you get to fight over it.
Right.
So it's like, it's tough, but you got to be willing to take the feedback, because she'll give me feedback.
No, for sure. Yeah. That's great though. And you guys have been doing this since the beginning.
No, the money dates were easy in the beginning. We were so broke, we didn't have anything.
Fair.
I always joke around, like the first 10 years of our marriage, I was like, yeah, we don't have anything, so we're good. But then as we started getting things and having money, I was like, okay. And then she started getting to watching CNBC, and then I got some advice about, money dates, and I'm like, that's really cool. So then, ever since then, and that has really helped, because it helps us grow together too, because we have different crazy goals, like, oh, we should do this and this, or we, like my latest one is like, we should have an Airbnb at the places we like to vacation. That way we can always get free vacations. It's a long-term play, but I mean, if it keeps working, I have friends that have Airbnbs that they make, they make a couple grand a month doing nothing, and then they can go stay there for a week whenever they feel like it. I'm like, that's genius. So, so we talk about that. We're like, hey, we want to do that. So always setting goals, because it keeps it exciting too. Because we've been together so long, sometimes it can get boring. You get in your routine. Like my routine's super boring, and hers is her routine. So it's like having something we're both like excited about it fires you up. Like, oh, this is cool.
Sounds like you guys don't have kids.
No, we do.
Oh, okay. Because I'm like, routines. What?
Oh yeah. Well, ours is. It's funny. Ours are 19 and 17. So.
Oh, okay. So they have their own lives too.
Oh, they have. Yeah, our routines don't. The kids we're past that chapter now. Unfortunately, it was fun though. I mean, I loved. When we had the kids, they had our routine involved around the kids. But now the kids are older. It's like we have to beg them to do stuff with us.
Right. Exactly. And what are you teaching them about investing?
Everything I can. So it's like my son, he knows so much. Like I've been teaching him about everything, and of course, his generation, all he wants to do is talk about crypto and coins and all that, of course. And I'm like, dude, and like I gave him the advice I tell him, but I'm like, that's awesome, dude. I said, learn as much as you can and do it. But I said, please max out your IRA every year. That's all I'm asking, is like have a retirement account, have an emergency account. And if you want to be a crypto billionaire, that's cool, because then you can buy dad a really cool car.
Right.
But I want you to cover your fundamentals too, because I've met people that have made a lot of money in crypto and lost a lot of money in crypto. And it can be like really depressing, because that money disappears fast. So I was telling him, just get the basics covered. Like you gotta do your IRA and have an emergency account, and then have fun and do what you like to do.
Yeah, that's awesome. Paul, again, thank you so much. Tons of
fun
information. Yeah. If we want to get in touch with you again, I know other than the still cool.
The still cool.
Yeah.
Instagram's the place to go.
Okay.
Instagram/PAUL HALME. There actually is another Paul Halme in this world, which is really strange, because it's like the rarest name ever. Yeah. And I was like, how's there only like 3 Halmes left in the world and 2 of them are Paul? Well, but yeah, and I don't know if we're related or what, but it's weird. So yeah, mine is Paul HALME. And I put a lot of free content on my Instagram and stories. And then when I have like courses or modules come out, I always update them and I put them up for promotion on my Instagram. So easiest place to go.
Awesome. Thank you again so much, Paul.
That was fun. Thank you.
Thank you. Thank you so much for listening to the Mental Money Podcast. Please go ahead and remember to subscribe, but don't hoard all of this good information for yourself. Share this information with someone that you know could use it, especially if they need a shift in their mindset or someone who would love to have more money. So until we meet again, remember, like Uncle Snoop said, keep your mind on your money and your money on your mind.